No. We're not done yet. One more day left here this week. In a small window of time tomorrow, I want to make sure you guys are ready to capitalize on whatever this market throws at us. Welcome back, guys. Thursday evening. It's May 27th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. Not just any Friday, end of the week, end of the month, holiday weekend, Memorial Day weekend, Friday trading session. I got a great video in store for you guys tonight. Charts are all prepped up in the background. As you can see, the gold's ready. Nasdaq is ready. S&P is ready. Glad to see you are ready as well. Bunch of ranges as we go into the holiday weekend. Got some bull ranges on the E-minis, some bear ranges on the gold. Whenever I see ranges, I'm thinking breakouts. I'm thinking head fakes and failures. Got a bunch of great setups we're tracking for tomorrow. By the end of this video tonight, you'll know my favorite trades for Friday, whether it's breakouts, failed breakouts, and everything in between. Now, before we get started in this video tonight, I just want to make sure to remind you guys, subscribe to our YouTube channel. You know, I publish this video newsletter every evening with my best trade ideas for the following day. So make sure you subscribe to our channel, hit that little bell icon so you always get notified every time I publish something new. And if you guys have any questions, drop those questions for me in the comment section. I would love to answer all of your questions. And as always, I really appreciate you guys tuning in every evening. If you enjoyed this video as much as I enjoy making it, do me a big favor, hit that like button, that thumbs up here for us on this video. But again, make sure you subscribe. Coming back next week with more newsletters after the holiday. I don't want you to miss next week's newsletters. Drop those questions if you got them, and thumbs up if you guys are the content here tonight on this video. But enough of the intro though. Friday is right around the corner. It's going to be a smaller window of time to trade tomorrow because of the holiday weekend coming up, but I want to make sure you know exactly where the best entries and exits will be for a Friday holiday trading session. S&P's ready, Nasdaq's ready, gold is ready. We got a couple of ranges here, right? Pretty much all three of these markets are range-bound markets. Got a bull market into a range right now on the E-mini, bull market into a range right now on the Nasdaq, bear market into a range here on the Nasdaq. I'll tell you, the S&P and the Nasdaq right now are both very bullish, but it's going to be difficult for these buyers up here. The easier money here tomorrow is probably going to be failures off the highs, going back down into those ranges. I would love to get some failed breakouts off of these highs. And of course, we'll definitely have our eyes open for successful breakouts once we get the proof of that breakout. Same thing with the Nasdaq, right? Nasdaq is not as bullish as the S&P. I would love to short those pops on the Nasdaq tomorrow. It's a range, right? We're going to buy low, we're going to sell high, we're going to focus on failures. We'll keep our eyes open for breakouts though. Over on the gold is a pretty interesting chart here tonight. Lots of great reasons to want to short the gold right now. It's basically a bear market into a trading range, but there are a couple wrinkles on this gold right now that gives us multiple areas to look to short those pops here. And of course, if the buyers manage to find a way to hold control, I have no problem trading reversals as well. I'll give you guys a heads up on what to look for to qualify the reversal and how to capitalize on it once it happens. So I'm pretty excited for tomorrow's trading session. S&P, Nasdaq, gold are all prepped, ready to go. Before we jump in and take a look at these charts though, I just want to make sure to remind you guys the schedule for tomorrow. Tomorrow is a full trading session. The markets will be open from open all the way to the close. Next Monday, however, though, that will be the early close, the official early close here. So be aware of that. You could trade all day tomorrow if you wanted to. It probably wouldn't be the most reliable, consistent time to be trading, especially tomorrow after 10:45, 11 o'clock in the morning. But you definitely could, right? It's just next Monday is the holiday on Monday, right? The 31st of May. And be aware, the markets will be open on Monday morning, except it's going to be an early close. It'll be a very, very small window. As I told my clients this morning, I would recommend take the day off on Monday. Go see grandma, right? Go do things that'll make you smile. That's always a good piece of advice on a holiday. I always tell people when there's a parade down Main Street, when the banks are closed, the schools are closed, right? If there's a parade going on, take the time away from the desk. It's good for the soul. It'll make you more prepared, more rested and refreshed when you come back next week on Tuesday. So Monday is the holiday. Careful on Monday. Tomorrow, though, I'll tell you, got a lot of really great news tomorrow morning. I'll tell you, it's going to be difficult to resist trading tomorrow. Now, keep in mind, right, it's a Friday morning. you always want to think early in, early out on a Friday. You got to have a good reason to be trading after 11 o'clock on a Friday morning. Tomorrow morning, though, I'll tell you, they pretty much pretty much the biggest news of the week is crammed into tomorrow morning. I would say probably the biggest news of the week is that personal income number at 8:30 Eastern time. That is an inflation number. And of course, you got Chicago PMI at 9:45. Those are the two big market moving events for tomorrow morning. 8:30 Eastern time, I think, is the big number tomorrow. That personal income and outlays. There's a rumor that the Fed watches this report the most because it is a lagging report for what's really going on out there. So personal income, personal outlays, a very, very good number to be watching for tomorrow. And of course, Chicago PMI at 9:45, the Purchasing Managers Index, another inflation report. Now, again, as I said, you've got to have a good reason to be trading after 11 o'clock Eastern time. So definitely looking at the news at 8:30, the news at 9:45. I think that 10 o'clock hour, I would say probably the best setups will probably come between 10 o'clock and 10:30 if I had to guess tomorrow morning. Be very careful, though. After 10:45, 11 o'clock, things will start to slow down pretty significantly. And remember, right, trading the markets is like riding a bicycle. It's a lot easier when it's moving, right? It's very difficult to keep a bicycle balanced when it's not moving, just the markets, right? When things aren't moving quickly, when there isn't a good personality as you go into late Friday morning, things become less consistent. Good trades don't work. Stops don't hold. So just be careful if you find yourself eager to trade after 11 o'clock tomorrow morning. Now, don't forget, tomorrow morning, every morning, Monday through Friday, 8 o'clock Eastern time, we're going to be in our trade room battling through every trading session. I would love to have you there, right there with us. I'll put all of the membership links you guys need in the description. You got to be a member. Come out and join us in our trade room every morning, 8 o'clock Eastern time. Have a front row seat for that news tomorrow morning. So again, grab that link in the description, get registered, and I will see you guys in the trade room. 8:30 news, 9:45 news. That is the big news for tomorrow. Early in, early out. Don't force it, right? Don't force it tomorrow. That's the name of the game. Let's grab some charts here. S&P's up, Nasdaq's up, gold is up. Again, lots of ranges right now. We're thinking breakouts. We're thinking fake outs. Let's take a look here at the S&P to kick this thing off here. Now, of course, you can see what happened today, right? Market took off to the downside in the pre-market, and the buyers got bailed out. Let's face it, right? The buyers got bailed out. If you watched last night's newsletter, you heard me talk about the fact that we were due to get some rotation going higher, right, in last night's newsletter. The market tanks, right, in the overnight, runs lower. And if it wasn't for that, $6 trillion, don't call it a stimulus bill, right, they announced at 8 o'clock this morning, this market would have likely pushed lower here throughout the entire day today. Saved by the stimulus bill is what I call it here today. Market rips higher here and pretty much just chopped around for most of the morning inside of that trading range, right? So buyers have control. It's a trading range environment. Anytime I have a range-bound market, in this case, the bulls have control. Anytime I have a range-bound market, I'm buying low at support, I'm selling high at resistance, and I'm avoiding the middle of that trading range. You'll notice I've marked out my levels of support below, my levels of resistance here up above. The range acts as a magnet. Now, as we go higher, I've got levels of resistance up above. I can sell short. I've got levels of support below that I can buy going long, using that range as a magnet. What I would love to do tomorrow, if I kind of had my choice at setups for tomorrow morning, is I would love to short these highs up here. You've got a lot of resistance up overhead. I know it's a very strong move higher, so we'll definitely address that here in a second. But you'll notice here, right, that the high of day today, the expanding trend line high overhead, and it doesn't take a very good memory to look back and realize this is the major high from this week here with this big range. Remember, ranges are magnets sitting there below us here. So it's very difficult for me right now to want to buy way up here at these highs right now. I would love to short this thing. And again, there's a couple different options, right? I can use the triangle top, the expanding triangle top. I can use the pendulum swing, which we all know how well those pendulum swings work at this point, right? right? If you followed this newsletter the last few weeks, you've seen how these pendulum swings work, right? I mean, you can literally look left and say the amount below that range from yesterday goes right back up, ends up hitting from there. So we could definitely see these pendulum swings are very accurate, and therefore that 15.5 area, really this whole area up here, right? This whole area up here can be seen as a resistance zone, and because there's a range below it, it can be used as a sell zone. Now the buyers are definitely not playing around. You could definitely see the sellers had their shot here as the buyers took it higher. The buyers tried once, buyers tried twice. A gorgeous nested failure, right? The sellers had everything they needed right there to run this thing back down. So it's definitely very clear the buyers mean business. The buyers are clearly here, and for what you can tell so far, they are willing to defend these lows. The big question though is will those buyers have the same guts that they had down at the bottom? Will they have the same courage to buy up at these highs? That's why I'm looking to short this pop here as we go. Now again, with the buyers being in control, I'm going to have to stay patient up here and really wait for those buyers to lose their grip. What I'll basically look for is the same setup that we saw here earlier today. Strong move up. Buyers try a couple times here, and when they do, we can then sell into their stop losses. That's the general idea of the setup I'm looking for over here. My first kind of favorite setup here for tomorrow as the price goes higher would be a buyer failure. It is very bullish, so I want to make sure the buyers try a few times. Let them try once, let them try twice. I would love to draw a trend line off that high and short that thing back down into that trading range. Let those buyers try a few times, right? Find that level of resistance to sell overhead. It may also be that trap high, right? Like when we saw earlier today, right? That trap high we saw earlier today, that would be, right, a fantastic short here for us going back lower tomorrow. Then don't forget too, oftentimes these failures off the high, they oftentimes will snap and run lower. That's my second favorite trade for tomorrow. If we can get these buyers to commit and buy a couple times, again, draw that trend line, selling into stop losses here using failure patterns, right? It's basically what this is. It's a failure setup right off of that high. I would then love to flip it around, draw a trend line off that low, a trend line off that high, and look for that short here right off of the first pullback off of that high. Now keep in mind, right, we're not just going to simply blindly sell the top of that channel. My favorite kind of entry triggers off the high of those channels are what I call failures and trap setups, right? Failures and traps. Now keep in mind, this is a 7,000 tick chart. I won't be trading off of this 7,000 tick chart, right? We'll move down to a 1,000 tick chart and we'll find those entry techniques. Again, my two favorites are failures and traps to short off the top of that new channel. Now, I'm not going to go into all those small details of the exact entry techniques we use every day in our trade room, but what I will do though is I'll go over all those smaller details, all the entry techniques, all the entry triggers, the entry patterns, the trade management. I'll cover all that stuff in our free trading class. What I'll do is I'll put a little pop-up there for you in the upper right-hand corner. Again, we'll go over the basics here tonight, but if you want to get a much deeper dive into how we actually qualify the patterns by using entry rules, the actual entry setups we use, and I'll also give you hundreds of examples of how we apply those setups to our favorite futures markets. You'll love that free trading course. So grab a little pop-up there in the upper right-hand corner if you want a deeper dive into all the entry techniques. And then, of course, my third and final one here would be a bull breakout, right? We get a bull market going higher here. A bull breakout will be the next logical thing. The next levels overhead here are 28. And of course, 38 and a quarter. There's that all-time high, as we can see, kind of poking its head higher here. Now, again, got to be careful up here, right? Lots of resistance. The weekly highs are up here, right? The daily highs are up here. Lots of resistance areas up higher here. So really, one of the only kind of easy ways we can trade this will be to wait for a breakout pattern. Now, breakout patterns are pretty simple. You want to wait for a move up, a pullback, and hold that pullback. Now, remember, I'm not going to buy that first, right? You don't want to buy that first pullback, right? Remember this from yesterday, right? This is the range we had yesterday. we had that strong move higher, right? Very strong move higher. So you would think buy that pullback. Yeah, it doesn't work that way though. When there's a range below you, that range acts like a magnet. So as we look at today, we've got that bull market up, we get that range. Now we're trying to break out again. Look what happened over here, right? I don't want to buy that first pullback. What I'll do though is I'll wait and see if those buyers can hold that pullback. And if they can, what do we call those? We call those 1, 2, 3 breakouts, right? 1, 2, 3 breakouts. If I can get that 1, 2, 3 breakout, I'll mark up that high, I'll mark up that low, and look to buy right off the low of that channel. And remember, again, we're not going to blindly buy the low of that channel, right? We're looking on a faster time frame. We'll find those failure setups. We'll find those trap setups off the low of that channel. Now, lately, we've seen a lot of these breakouts into trading ranges. So that's something you want to kind of keep in mind too, right? Let's say, for example, we rip higher here overnight, and tomorrow morning, right, we're trading sideways ahead of the holiday weekend. That is very, very likely tomorrow. At that point, what you want to do is find levels of support below the range, right? And it could be as simple as that prior high back there, right? That 12 and 3/4 high. Let's say, for example, right, we run up and up going sideways up here. You're going to find that level of support below you. Again, it could be this level right here, right? That prior high there. Wait for that pullback. And remember, ranges act like magnets. So once we get that range, just like right here, right? Once you see that range start to form, you know that's the new magnet right now. This range below is no longer in play anymore. Once we see that new range form, find those support levels below the range. And remember, the key is wait for those breakout failures, right? And literally buy it right back up into that trading range, right? Failure patterns off the low of that trading range. And again, we'll see if we can get that 1, 2, 3 breakout pattern, find that high, find that low, right, and buy that pullback off that low. That's always one of my favorite entries, is at the low of that new hidden channel. Targets overhead, 28 and a quarter, right, 38 and a quarter, get some pretty easy levels there. Now, keep in mind, if we don't get that move up and the short back down, if we just simply roll over, right? If we just simply roll over, keep your eyes on those 1, 2, 3 reversals. Mark that low, mark that high, shorten off the top, right, of that new channel. Remember, first test is always the best test. Bull traps, buyer failures, right, targets are back down to retest those lows. So would love to short off these highs right now in the S&P. I also have no problem trading a breakout up here. The problem, of course, though, is I don't want to buy too high on the S&P. All right, we're looking pretty good, though. Pretty easy, pretty straightforward plan here. Fade the breakouts. Be careful trading those breakouts because of that range below us. How about some Nasdaq here tonight? Nasdaq is very similar to the S&P. We are bullish. We are range bound right now. The buyers are doing a great job at defending this, but they're not getting anywhere, right? They're not getting anywhere. They're not making any highs. They're not even retesting highs, for crying out loud, right? They're barely even getting above that trend line. So very difficult for me to want to buy this market as it goes higher until we can see what? Until we can see some strength and some momentum turn here for those buyers. The plan on the Nasdaq is almost identical to the S&P. The only big problem we have is that pendulum swing, because that pendulum swing really puts kind of a cap on this, right? On the S&P, we can easily break that pendulum swing and get some really good proof of a breakout up here. The Nasdaq, though, there's just enough space up here to make it interesting, but it's going to be very difficult to buy up there. Just be aware of that. Right? On top of that, if you look left here again, there's your weekly high. So in all reality, just like the S&P, this whole area here, right? This whole area up here it's going to be unless we can get a lot of strength, it'll be very difficult for us to justify being a buyer right up above these highs here. So same thing as we talk about in the S&P, right? I would love to sell this top. Again, you almost want to look at this as a bit. Look at that range, right? It's almost one big trading range right now on this Nasdaq, right? I'm looking for shorts up here, right? Absolutely looking for shorts up around these highs. And again, if we get enough strength on this, sure, I would try to break out, but I mean, this is definitely not where you want to be, be buying breakouts unless you get a lot of strength up here because, again, you're above the high of a range, weekly highs up there. So that's going to be the plan. The plan is to short these pops here on the Nasdaq. Now, again, there's no doubt about it. The bulls have again, I say control, but it's very fragile, right? We talked about this last night, right? The buyers, they have it, but if it wasn't for that bailout, if it wasn't for that stimulus package announcement this morning, this thing would probably be going a lot lower. We're talking about I won't go into detail about the actual package itself. The bottom line though is we're trying to go higher here. We do expect the buyers to go higher. I would love to short the tops up here, right, as we go. Same basic idea, right, as the S&P. We make that run higher, right? It's very bullish. Again, it could be here, it could be here, it could be here, it could be way up here for all I care, really. It doesn't matter where it is. The problem I have is momentum, right? Momentum is the problem. So what you want to do is you want to give those buyers the benefit of the doubt. Let them try once, let them try twice, and once you get those 2 tries on there, now you know exactly where their stops are and making short right into those stop losses. And remember too, when they roll over, you can almost always grab that new channel on the other side, right, and grab that short off the high of that new channel, right? It's a failure pattern into that what would be a hidden channel pullback pattern, right? It's a very simple pattern when you think about it. All we're doing is we're waiting for this thing to poke its head higher, waiting for those buyers now. We're not forcing anything. We're not predicting anything. We're waiting for those buyers to try a couple times, and we're simply identifying where their stops are. Okay, I love to draw a trend line off that high and short that trend line off the high, or I can short into those stop losses as we go. Again, mark up that low, mark up that high, and on a faster time frame, we'll drill down and find the entries off that first pullback. So failure into 1, 2, 3 reversal, right, into first test is always the best test. Failure into pullback combination as we roll this thing over. And again, we'll definitely drill down. This is a 4,000 tick chart right now. We'll drill down to an 800 tick chart on the Nasdaq. Look for those bull traps, look for those buyer failures, and look for that short as we go. Target's pretty easy, right? Target's back down around that big low at 620. And if the party really gets moving tomorrow, you get that 570 area, that 547 area down there, a prior high. Been watching here, right, pretty much since the beginning of the week this week. If we don't, right, if we don't get that pop going higher here, let's say, for example, the market rolls over, right, and runs lower. How do I trade that? There's actually plenty of opportunities as we go lower here. My favorite as we go lower would be a 2-try trap. Market runs lower, shallow pullback, higher high or lower low in price. Watch that trap high for that short from there. That would be a fantastic setup, especially in the overnight session. If you guys are watching overnight here, if the market does not keep going higher here, rolls over, at that point now, you don't want to chase it because you get those lows, but at the same time, you know it's a big time failure for those buyers, right? The buyers should be pushing higher here. If they don't, it is a big problem here for the bulls. And again, that's why we're looking for that short. I don't want to sell too low, right? I want to sell high, which of course is why I'll use that trap setup to short that pop, right, on the way back down again to that 1570 area. Don't forget on these trap setups, mark that low, mark that high. Always extra bonus points, always extra confidence whenever we can get those trap setups at the high or the low of a channel. Always kind of a go-to setup every morning in our trade room. So if the market rolls over, that's something we're watching for here. We can also, if the market really pushes lower here, I can mark up that low, I can mark up that high, right? And a lot of times what will happen is these will go up, the pullback will try again. You get that failure into pullback combination right off the high, failure into pullback combination. Again, targets now down around that 13,570 area. Again, I'll go into more details about these pullback combinations. I'll talk a lot more about those in that free trading class that I keep mentioning in the upper right-hand corner, right? So be aware of that as the market tries to move higher here. How do we trade a breakout? The breakout of the downside is easy, right? 1, 2, 3, break down, mark that low, mark that high. We're shorting, right, that first test. That's the easy one. one. The hard one is the one where we go higher here, right? That's the hard one because, again, we've got our range right here. I've got the range expansion down, the range expansion up. I know where that level is. It's going to be difficult here. What I'd like to do is see this thing get up around these highs, hold a pullback, and really blast. Again, we're going to have to see a lot of strength. And it's not just strength above the range. It's going to have to be strength holding above these areas. Right? It's not going to be just a strong move up here. We're going to have to see a strong move up. We're going to have to see those pullback hold and see buyers commit and buy more. Right? Once we see those buyers coming up there, then we're good. But they haven't been able to do that yet this entire week. Right? We've seen a lot of real strong moves higher, but they haven't been able to hold. Right? The money has been easier to make looking for those buyers to get that big pop, and then looking for the buyers once, buyers twice, right? And then shorting it back down from there. That's how I would rather trade this here for tomorrow. But again, if we do get that strong run up, if the buyers can hold on to it, right, and make that break, again, we call these 1, 2, 3 breakouts, I would have no problem marking the high, marking that low, right, and looking for that. Again, first test is always the best test. I'm looking for bear trap entries. I'm looking for seller failure entries off the low of that channel. Where's our target going to be at that point? Right? Where's our target? Our target now, we've got this big 13,818 area. You can barely see it over there, right? That prior top over there, that'll be your big objective. If these buyers can get their act together here and hold these highs. Right now, we'd love to short these pops, short the tops on the Nasdaq. Just remember though, don't force them, right? It's very, very bullish right now as we go higher. Let them try a couple times and short that sucker back down into that trading range. Nasdaq, relatively straightforward. How about some gold? Wrapping this video up here on the gold tonight. Gold is pretty interesting. Gold is it's a bear market, as you can see. It's kind of a combination of a range, right? As I mentioned earlier, right? There are ranges here galore on these charts tonight. It's definitely a range, right? That's probably the most important factor in this. It's a bear market into a trading range, so therefore that range is the magnet. We also, of course, have this big kind of spike in channel almost. Right, you get that big move down, right? Spike in channel. It's basically a spike down into a very wide channel, and that's also very interesting because that also gives us a sell zone at the base of that channel, right? Whenever we have a strong move down into a kind of a lazy channel down here, we call these spiking channels, right? These are one of the top 5 chart patterns that you want to learn as a price action trader. And then of course what we want to do is mark up the base of that channel. Right where the channel kind of runs into that downward spike, right? That's where usually the best entries are going to come on these types of, again, spike and channels. And so if I go back to my chart here, you can see that's kind of exactly what I'm looking at. So I've got that area up top here, that 1903, 1906 area. That's a sell zone. And of course, this area overhead here will also be a sell zone, using that range as a magnet right now. How do we sell this market? Well, you can see that the most recent move here was pretty strong. We are rotating off the low of that range. So there's definitely no doubt about momentum right now. The bulls definitely do have some short-term momentum. But you know me, right? I don't care how strong the pop off the low is. I want to see if these buyers can actually hold this, right? We see a lot of these real strong pops off the lows, but all that ends up happening is it ends up collapsing right back down in. I'll be looking for that, right? For that pattern right over here again. Right? Get that pop higher here. Get those buyers trying a few times and sell it right back down. In fact, you can see here kind of how that pattern works, right? We talked about this quite a bit here so far. Strong move down, big pullback. Again, that much strength off that low it's very important that we respect that momentum, because a lot of times they will run this thing to a new high and then bring it back down. So to prevent that stop and run, let them try once, let them try twice. Again, stops are right there. And then, of course, from there, I can flip it around, mark that low, mark that high, and I can sell that first pullback for that run back down. We've talked about this particular kind of price action combination quite a bit already, right? This is exactly the same situation. I want to be trading on the S&P and the Nasdaq off those range highs tomorrow morning. That is pretty much what I'm looking to do here on the gold. The one big problem we have is you can see this trend line coming up off the low, right? We don't have that problem on the other market. So what I want to do is, there's a couple ways I can do this. The best way to do this would be, let's go up, buyers try once, buyers try twice, and we can actually use that trend line, right? That would probably be kind of the home run setup, trying to sell short without selling into that rising support trend line, right? You always want to kind of look and make sure that you're not selling right into that rising support. So that would probably be the best possible scenario we could ask for. Now, sometimes we don't get that. In fact, a lot of times we don't get that. A lot of times what will happen is the market will pull back. It'll try to run, but it won't get there, and you have to wait for that trap, and it's the trap from there. Make sense, right? So we don't want to. What I don't want to do is I don't want to go up. Let me mark this a little bit different color here. I don't want to go up. I don't want to go up and try to sell short into it, right? What I want to do is I want to go up, let those buyers try, get underneath it, right, and use it, again, as a level of resistance. I got sell zones above, right? That would be the ideal. If we don't, right, let's say, for example, we get a failure, it collapses and rolls down, it tries to come back up, right? But oftentimes the gig is up, right? Oftentimes it won't pull back all the way. If it does kind of bounce prematurely, now you want to do is mark that, right? Mark that high and stay patient, because it will almost always come back to get you in. What you don't want to do is chase after it. And again, as always, mark up that low, mark up that high, right? And there's your, again, those hidden channels, right, to sell off of that high here. So again, would love to short these pops on the gold. Very difficult to want to buy up here, that's for sure. Very difficult to want to buy up here unless we can get a bull breakout. That is the kind of second or third way to trade this thing for tomorrow, would be a bull breakout, right? If we see this market push higher, if they can hold that pullback and then go, we call those 1, 2, 3 breakout patterns. I'm going to mark up that high, I'm going to mark up that low. And again, on a faster time frame, right, this is the 1,000 tick chart here on the gold right now. I'll be drilling down to a 377, right, a 512 tick chart on the entry time frame, and looking for those bear trap entries, those seller failure entries around the moving average. Pretty easy, pretty straightforward. Again, I'm not going to go over all those details in this video right now, but I do cover all those smaller entry techniques, all the details of our 3-step strategy. I cover that in our free trading course linked up in the upper right hand corner. So again, right, want to sell the pops here as we go. One more thing to kind of keep in mind here, and again, and by the way, if the buyers were able to take control of this, you get a pretty easy target up top there, right? That 1915.6, 1912 area. That will be the big objective here for those bulls, right? So buyers grab it, they hold the pullback, they jump higher, they're breaking free of this range at this point. We're marking up that high. We're marking up that low. We're looking for any of our favorite entry techniques, right, to buy off of that low. And I'll go over more details on that in the free video class. All right, so looking good as we go higher, or do we get it going up, right? 1, 2, can I use that trend line, right? That would be ideal. Remember, there's 2 things in play right now. 1 is momentum, right? Strong push up, a lot of momentum. 2 is that trend line. Right? That's why I said earlier, let them try a few times. Let them kind of dig their own grave there. Their stops are sitting right below that low. Ideally, you want to short off that trend line. If you don't get it, right? Remember again, if you don't get it, if it rolls over and runs, just stay patient. You'll almost always get that trap entry on the way, right? On the way back down. Right? Just don't chase it, right, as it's going lower here. So now we know what to trade it as it goes higher. We know what to trade it if it runs lower here. If it does run lower, right? I've got my low of day at 1890. I've got my pendulum swing, right, at 1887. There's a very good chance right now that these buyers try a few times. The market collapses back down. They take out those lows, and we grind down right into that pendulum swing. One more thing I would keep an eye on for tomorrow is if we do end up, much as we talked about earlier, if we do end up with that strong run down into a trading range down here. It wouldn't surprise me whatsoever because we've seen a lot of that this week, right? A lot of these strong moves, low volume, kind of holiday weekend, right? So if it does end up running lower here and we start seeing that range down here, what do? You find levels of resistance up above that range. You wait for the pop. You wait for those buyers to come in and foolishly buy that breakout pullback, and you sell right into their stop losses. Very simple strategy. Just remember though, don't try to buy that low, right? This will be a very bear market at this point. I know it's a range, right? But keep your eyes on that sell side. That'll be a lot of momentum down there for the bears, right? And then for some reason, right, another scenario will be we take a move lower, they hold that pullback, right? They blast going lower. If it really turns, again, look back here, right? Market moves lower, they try, but they don't get anywhere. You know what I mean? They're not really getting anywhere here, right? If they can get this thing lower, hold that pullback, and really blast here, that'll be enough momentum for me to grab that low, grab that high, right? And I'll look for that short right off the high of that channel. All right, guys? So got some really great setups here. Again, I would love to short these highs here pretty much across the board here for tomorrow. I have no problem being a buyer on this, but I do want to see that 1, 2, 3 breakout confirmation in order for me to give the green light here to the buy side here for tomorrow. Keep your eyes open for ranges. Ranges ahead of a long weekend are very, very common. When you see those ranges, we're buying low, we're selling high, and we're using those failure patterns that I talk about so much in our free trading class. So again, grab that link that popped up there in the upper right-hand corner. Grab the link, get registered as a member of our free trading course. You'll learn all my favorite setups, my 3-step strategy, and I'll send you hundreds of examples of how we apply those strategy to our favorite futures markets. You'll love it. And don't forget, too, also Monday through Friday, 8 o'clock Eastern Time. I would love to have you there right there with us. I'll put all of the membership information you guys need in the description of the YouTube video. I'll also, of course, put a big button for you guys right below this video tonight on the trading blog. So hit that button, get registered, and I will see you guys in the trade room every morning, 8 o'clock Eastern Time. Guys, my name is Joseph. Don't be afraid to call the office. I'll be here all over the holiday weekend. I'm not going very far, so I'll be here if you guys need me. Call the office if you guys have any questions there. Don't be afraid to use the live chat on the left, live chat on the right. You can always drop those questions in the comments section below as well. I hope by now I've earned a subscribe or a thumbs up on this video. Hope you guys enjoyed the content. I'll see you guys, if not tomorrow morning in the trade room, I will see you guys not Monday, right, but after the holiday on Tuesday evenings, nightly newsletter. As always, guys, be well out there. Be nice to each other. Have a safe and very happy holiday weekend, and we'll see you guys next time. Adios, amigos. Bye-bye for now.